Hi, welcome to the Market Alert for Wednesday, the 14th of August 2019. So Trump, trade blink sparks stocks and yuan spike, but Treasury curve collapses to 12-year lows. A very interesting point there. The 10 and 2-year are more or less inverted now as well, reaffirming the potential for a recession down the line within the next 12 months. So let's see what happened. As I've said before, the markets are only moving on Trump tweets, and yesterday Trump said that he was going to delay some of the tariffs on mobile phones and some other goods, and this sent the market straight up vertically as a bit of relief for the market, which you can see here. So the market trading up to, let's have a look, from the start of the session to the high, 600 points on a tweet yesterday. Unbelievable. Then the market pulled back, we see some more buying, and then we got into a sideways move with the market running out of steam there, got resistance to the left, and also 76% retracement before the market then showed a switch as it ran out of momentum, and realizing this is just a tweet and not any basis for any real economic move. Overnight, prices have remained sideways to lower there. You can see prices pulling back a bit. They will certainly need to remain above the 200 bar moving average if they're going to hold. That's for sure, because when you look at the daily chart, all we've got is a straight reversal. Yes, there's an increase in the volume, but we're still stuck in this sideways range here between 276% retracements, and frankly, I don't see if there's anything else at the moment apart from another tweet to move the market back to the upside, and would expect the market to continue in this sort of vein and possibly a test of the 200 bar MA. But as I've said before millions of times in the Market Alert, they are going to do whatever they can do to keep this market on the highs, and eventually their objective is to bring it back and keep the illusion alive until the end of the 2020 elections, which is going to be a long way away. At the moment, that's November 2020, and we're only in August 2019 at the moment. So it's a tough call for Trump. Could be seeing the US economy going into recession halfway through his campaign, but it's certainly interesting times. But coming back to this, that's what I would expect. Yesterday's move is purely a tweet move, and this market will move higher on anything at the moment. We just go and have a look at the implied volatility. This obviously retracing massively yesterday because of the Trump tweet, and the risk in the market for yesterday had removed, but that doesn't mean to say that it's not going to return. And the same in the bigger picture here, you can see that we're still red in the implied volatility and below the 20 bar moving average as well. So it remains bearish at this point. Like I said before, you just got to watch out for the Trump tweets, and they will generally be bullish ones as well. And whilst we're here, we'll look at the yield curve. You can see this spiking down. This is for the 12th. It pulled back just a bit on the 13th, but otherwise you can see the yield curve is becoming wider. And again, this is just reaffirming what we've been saying in the Market Alert now for weeks. As the yield curve inverted started in March and now has really got a grip, and this is a recessionary indicator. So let's have a look, see what the pound did yesterday. Not a lot. Tried to go short below the 200 bar MA, but you can see the buying coming in, and then prices reversing, and then there was the sell signals and the market then returning, but it's only 50 basis points between the high and the low there, and you can see we're just stuck in a sideways range once more. Talking of news, let's just have a quick look, see if there is anything. We've got the CPI out this morning at 9:30. Interestingly enough, I don't know what's happened to the RPI these days, but the CPI is forecast to be slightly lower than last month. We'll see if this happens. It won't do a lot for the market unless the figure is widely out of kilter with the forecast. And finally, in Bitcoin, this moving lower, as we discussed yesterday. What I'd be inclined to do here is certainly to mark up the lowest point on the fib retracements, 9878. You can throw a few more in if you want, but 76% is the one that I prefer. Seems to be a really good benchmark, so there's some downside potential for this at the moment. In the 4 hour, the market's broken, you can see this, and at the 200 bar moving average. Let's see if the market can pull back to this area. Last time it was offered a really good trade when it did so. And the 15 minutes, after saying yesterday how spiky it had become, it smoothed out, and we saw prices moving nicely to the downside there. So you can see there below the 200 bar MA, and it was a sell all the way. And then the overnight, the market's also rounded over, as we see here, and at the moment it's just finding some support down at this level, but well and truly below the 200 bar MA for Bitcoin at the moment, and there seems to be a bit of smoothness back in the price bars there as well. So I'll have a look at this today, see if there's a few trades in this market. So that's about it. Let's have a quick look at Deutsche Bank. We can see that this is moving lower. Here's the line that we drew in many weeks ago. Let me just get rid of this there, and then just drag this across at the 640 level, wasn't it, that Charles Nenner spoke about? We haven't reached it yet, but certainly looking like we're heading towards it. So Deutsche Bank back on the radar as well there, which could bring carnage to the markets in the next few weeks as well, just to add to the yield curve inversion and Trump doing whatever it takes to try and keep the stock market afloat by sending out tweets and delaying the tariffs between China and the US. Interesting times. And with that, I will conclude, and as ever, thanks for watching. See you in the next one.